Okay, cool. So, all right. So yeah, you put me onto this, and I think you even had paid for the
$14 subscription.
yeah. So the subscription gets you dark pool prints. So this is what I wanted to go over today is just this app options flow. Let me actually show you what it looks like. I know you know, but for people that'll watch this later, but yeah, these are actually, I'll show you all the apps that I use and kind of break these down. So this one, you can check it out if you want, but it basically used to help when we needed like the RSI overbought, oversold kind of thing.
Hmm.
So let's like click on one of these to see, let's say Snap, and it breaks down, just the different signals that you might get, patterns, stuff like that. So it's a great resource if you're not sure what to look for. And then the unusual whales is great. They just have way too many
Oh,
emojis and codes you got to figure out so you can decode what that even means, right? Because this unusual whales is going to throw out all these different alerts at you. I'll actually show people so they can see. But it has, oh well, at least they started to spell it out for you now. So it used to just be just these emojis and you had to decode that, but I guess he realized that yeah, people don't understand that stuff. That's not going to work. We don't need to learn the language of emojis when it comes to options alerts. We already got enough to decode. But it's good now that he's got the emoji definitions by it. Hey, this is bullish. If somebody, you see the shopping bag, it's on the ask side. That means that they literally like, yo, I'm willing to pay whatever you want for it, right? So they purchased the higher price. So when you see this ask side, that just means that they were aggressive in their purchase. Bid sides mean that they're just playing it safe, right? They're going for the lower price. It's not really aggressive. Like you see here, the monthly bearish, which is interesting because yeah, this is a call. So this is just too much decoding. I use this, maybe I follow the tweets. But some other apps that I use, obviously TradingView is great. Webull, we use this all the time. Stockhoot is great. It'll send you these alerts to say that, hey, there was a golden cross or a death cross on something. Let's see, where is it? Okay, here we go. Yeah, so it only does these end of day. So it's not like this is like, this is a live thing. So it'll only send them to you at the end of the day. Like, I don't think they actually stay in here. So you have to actually either set up notifications or drop in here every now and then, because this will update daily and then it won't actually hold that information. It'll just alert you and say, hey, these particular assets did a golden cross. This particular assets did a death cross. And here are the MAs that we kind of talked about with your short terms and then your long terms, right? So Stockhoot is great just for seeing how the market's moving and then getting an update on that. But one of my personal favorites is probably this options flow right here. It's simple. I understand it the most. Now, if you have the premium, you can see dark pool prints. Okay, so dark pool prints are essentially orders. What's going on, Thomas? Essentially orders that come in and they are done off the market. Okay, they are done through private brokerages that don't allow these orders to affect the market directly, right? Like if somebody just came into the market and bought this particular ticker and they bought 468 shares or 468,000 shares, it would affect the market drastically, right? Whether they sold this. And so dark pool prints, it doesn't tell you if they sold it or bought it. Okay, so that's one thing that you got to understand. We don't know if these are buys or sales. We only can see that there's this many quantity at this price. Did they buy it at this price? Did they sell it at that price? You have to determine what's going on at this, because some people could be shorting something. So they could be selling and shorting a position, or they could actually be buying it at $75 for, and I want 468,000 shares and I'm paying 35 million. right? So this is 35 million to the good or to the bad of your calls, but it cannot go directly on the market because it would just increase the volatility of the market, right? If this was a buy, the price would just shoot up, right? So this has to be put into the market in increments. So this order will be done in thousands or hundreds or whatever it is. It just won't happen at one time. So dark pool prints allows you to see that. So if I'm feeling bullish on something, let's say Uber drops, like you can see Uber in the gray here. Let's say Uber dropped in price and I think that $46 is a buy, and I go in and I buy, and then I see this dark pool print come in for 300,000 for 46. I can only assume that that is a buy. I don't know what Uber's price is right now. But if 46 was a good price and I want to buy at 46 and I see this, like I said, this can tell you that, okay, maybe somebody with me, and they bought 300,000 shares, spending $14 million to the good of me purchasing Uber at this point. So dark pool print, y'all saw that futures is down. So I'm thinking Monday is going to be a little rocky. I was hoping for a good start, but I think Monday's going to be rocky. But dark pool prints, that's just the simple on that. But what we come to is right here, unusual options flow. Okay. Now what I'm looking for in here is the highlighted ones. Okay. Now the red means that it is a put. Okay. Puts. Now highlighted red means that it's hot. It's hot. You see this right here. This is what I'm looking for. Like if you want to buy puts on the SPY, see, now that I see this, y'all, man, I'm not even gonna lie. Based on what the SPY looking like right now, I might buy a put early morning. But this is a sign right here that people are betting against the market because this came in at 304. Okay, which means that if this alert came in at 304, the market closes. This is on Central Time because I set it to that, but literally the market closes at 3 for options, which means that at the end of the day, literally people flooded puts on the SPY, which is the S&P 500. And at 304, it literally was like somebody came in and spent $3.4 million on puts. All right, so options flow, it's another thing that we do not know if they are buying or selling. So this could have been somebody releasing these puts against the SPY because it did kind of hit a point as a beginner. Which of these apps is most valuable, or do I utilize all? You definitely want to utilize all of them. Like just to kind of take a look at these. Now, Seeking Alpha is going to be your news. Webull is going to be how you trade and the data that you get. Robinhood is for beginners, right? If you just want to like really do easy trading and just like, it's kind of like a video game. It's like super beginner, but there's a lot of risk that you take by not having the proper data because the time intervals are very low on here, or they're almost non-existent, right? I think you only get 15 minutes, which means that you're 15 minutes behind the rest of the market all the time. So this Robinhood is totally beginner. It's like, this is where you start. This is not even where you practice. It's just like where you're like, I want to be interested in it. Robinhood can do that. Webull, you drop in Webull without knowledge, you'll get a little intimidated. But this is your best tool. This is going to help you succeed in terms of data, analysis, indicators. This is my go-to. TradingView is, I use cheat code here. So if you have the cheat code algo, you also have TradingView. TradingView also has independent indicators. But I don't really like using those because if the rest of the market is not using them, it's like being on a stranded island by yourself. You're the only few people using this, and it's not going to do you any good in terms of resources. But cheat code is an algo that, is totally beating the market. So I use cheat code. Stockhoot, just great for keeping you updated. Thinkorswim if you want to practice. So paper trading, you can actually paper trade options in Thinkorswim. But options flow, like I said, this is the go-to for options. But if you do not trade options, you still need to have options flow because on this homepage, it actually tells you what's going on with the market. So right here, we can see that the put flow has increased, right? So it's actually higher than calls, which means that more people are betting against the market than they're with the market. So if you're in a position right now where you're like, I want to get in the market, this is a sign that that's not good. That's not a good idea. Okay, because this right here tells me that there's a lot of, oh, so I have to, if you click on that, you gotta get the access to see whatever is the information in these. But this is all I need to see, right? I need to see that if I am somebody that is bearish against the market, well, where are they putting their money? Okay. So people are betting against the NASDAQ, they're betting against the S&P. And these are, I think it's like small business. It's like Russell 200 or something like that. Apple, they're shorting this obviously because it's been on a run, but people are also really bullish on that. But this bullish flow could be sales of calls, okay? Because we know overall in the market right now, calls are losing. All right, so at least as of Friday or just the last 2 days. I mean, my long-term accounts have been down the last 2 days. So as of I think Thursday it started, and then Friday it got bad. So this is proof of that, right? So always watch this, because this flow is going to tell you the sentiment overall in the market. Like I said, if you're feeling really bullish and aggressive, this ain't the time, right? Because puts is in right now. So hold on one second. Let me put this on do not disturb. Okay, so and you can also create a watch list, right? So there's a watch list. When you scroll down, these are just stocks that I trade on the usual. There are some that I don't like. This is old school. I haven't updated this watch list in quite some time, but I can, like, if I trade Alibaba and PDD, I can come in here and be like, okay, tell me what's going on with Alibaba. So you can see this without a subscription. So you can come in here and be like, well, what have been people doing on this? Well, they've been extremely bullish. Okay. There's not a single person coming in here to short this. Why? Because we're already at a low, right? If our 52-week low right here is 198, okay, well, we're right there at it. Okay. So this week, we actually got to see this 198 over here. Actually, let's say a month, because at some point we did. Well, this is one of those line charts. So they're not going to show you the low, but on the day right here, we actually experienced the 198, which is the 52-week low, which is why people are extremely bullish on Baba, because like I said, we're at a position where people are saying this is an attractive price. So when you're looking at the options flow and you're looking for a particular strike price, here they are right here, right? If you want a strike price, you want an expiration, you know, here it is right here. Depends on how much money you have, right? These are premiums. So let me break down how to read these. So when these alerts come in, they're going to be the date at which they came. Okay, so all of these came on Friday. All right, so the time as well, when the market hits, you can see it started rolling in. So at 8:38, they were like, I'm going short term. Right? They were like, oh, it's down. Let me buy it now and I can catch this wave. So literally as the market opened up on Friday, people were immediately buying short-term calls, right? They were either buying them or selling them. I'm not really sure, because I didn't even hold any contracts for Baba for the week. But this is telling us as soon as the market opened, right? Because this is in Central Time. So the market opens at 8:30 for me. As soon as the market opened, alerts started coming in. All right, so these alerts are telling me that they have a short expiration. So basically they were on the same day. So I guess this was actually Thursday. So maybe people were selling prior to the decline on Friday, because Friday was actually the 16th, I believe. Yeah, 17, 16. Yeah, Friday was the 16th. So as the market was going down, nobody was buying calls. All right, because there's just, if the market's declining, there's no point in coming in and trying to beat it with a call. So all of these were actually probably either buying more or selling on the 15th, which was Thursday. But breaking this down, this is the expiration right here. This is the strike price, right? So the premium is how much they spent on this particular transaction. So whatever alert that came in for this order, the premium is how much they spent, right? Or how much the transaction was at least valued. And like I said, that can either be a sell or a buy. We just need to be understanding the price action of the underlying asset to understand if it's a buy or a sell. like I said, if I come in here and BABA is, low, and then I start getting call or alerts for a call, and this is a little long term, right? Of course, I would come in and I would feel more confident on trading just because I can see that, okay, I have this support in here with me. But if if you happen to come in and you're like, yeah, I should go, let's see, something that's been shorted. Yeah, maybe I should go buy some, let's see, Snap, where's Snap? You can actually type these in too. You can click the search. Let's type in Snap. All right. So this is one that's actually been going back and forth, right? So, and let's look at the quick chart for this. So you can see Snap went up and then it shot down and then it went up. A lot of calls were brought here. And then over the last few days, it's been going back down. So now that it's gone back down, you can see that the other day, there was an alert that came out on the 9th to buy this and it shot back up, right? Now that it's falling over time, you can see down here the transition that it made. It went from people buying these calls to turning into puts, now back to calls. You can see that transition, right? So it was literally like people were like, okay, now that it's fallen, I'm ready to buy calls again, because people were with the puts as it fell, which shows down here where you have these puts. And once these puts were able to cash out, maybe these are people selling the puts and just saying, hey, my expiration is short. So let me get rid of these puts and then buy this call to catch this ride back up. I don't know that because I don't trade Snap, but just assuming this based on the data. If you trade Snap and you want to buy a call on Snap, here's that person in this trade with you, right? So I always use this app to really help me gauge the actual options flow. And this app, like I said, it does it a little better than the rest of them, because on this feed here, this is a live feed. It's not filtered by any means. It's literally live flow. So the flow is going to be basically any and every stock that needs to come through. But I can also create a watch list where I can come down here and say, hey, well, alert me on this. Like the other day, it alerted on Workhorse. Okay. Now, when it did that, it threw out this alert right here. So on the 13th is the one that I took. And I think I made about 110% or 130% or something like that's on this trade. But basically, I saw this alert come in on the July 13th. Okay. Now, if I get an alert that Workhorse has an an actual options flow coming in on calls, well, I got excited because I was just like, well, dang, if that can alert, okay, well, I feel pretty confident. Let me actually go to the list here so you can see what I saw. Oh, this ad has to go away. Hold on one second. All right. So you'll be able to see the actual one that I saw that lit up. Okay, this is what I saw right here. And that might not have actually been the one. It was a little sooner than that. Maybe that was it, the 16th. But basically, like I said, I look for these types of alerts. Now, it's not going to alert you by your mobile phone unless it's one of these. That's what I love about this app, because if you turn on the notifications for unusual well, it's going to hit you up for all of this. It's going to be like, yep. But this app in particular, like, I don't know if I set the settings and notifications like this, but it only lets me know about these, the like completely fire, like highlighted. And this is the only one I want to trade too, because that lets me know it's heavy. All right. Now, the only reason why I bought this and risked my own money on it is because that I realized that Workhorse had been heavily shorted. So if they can tell me that there is a highlighted, unusual options flow on calls, right? That just gave me more like, and then you started to see them pour in, right? It was like, maybe you got it heated up right here, but then after that, it was like call, right? And at this point, I was probably out of this trade. Because, all right, we made some money and then everybody started getting back to buying puts on it. And then it's back and forth. And I don't want to get caught up in this. This is a whole bunch of back and forth. All right. But when this went off, I went immediately and bought a call in the money. I didn't even, you don't have to follow this. You can, but you don't have to. I just immediately went in and bought the closest thing in the money and bought like 2 or 3 contracts for it and got 130% by swinging it till the next day just because it was cheap. Yeah, it 130% swinging that the next day. So I use it definitely to catch these alerts. Like I said, if you have a watch list, it will most likely update you, but it will always send you alert when it's this type of stuff. So like the SPY heavy on the puts, this was right at close. So this either could have been a buy or a sell, like I said. So definitely use this app. It's going to throw out a lot of signals in the feed. But like I said, you want to look for the highlighted ones. But if there's ever something you're trading and then all of a sudden you start seeing, calls pour in for it. Let's say, for instance, you were trading Tilray, right? And you're like, I think Tilray is going to go up based on the news. But I always tell people you sell the news. There's not been a single situation where news has been the next catalyst and that joker didn't fall the day after that news. So, I mean, literally federal marijuana went to court or just the discussion, right, in terms of the bill and drafting the bill, and literally weed stocks tanked. So that's why I say you always want to protect yourself against the news, because it's actually not good news, because whoever knew the news was coming, they bought the rumor and sold the news, because essentially that's what stocks is. Like, we're betting on value and we ride that value out until there's that realization, whether it's earnings or the news that we expected. Okay, thanks. Great. That was a great ride. I'm going to take profits from here. Let me check the chat out. Are those option flows delayed at all or exact real time? That's real time, Blair. Like, let me show you. Let me actually go to the beginning, because it does it every day. Oh, wait. Oh, yeah, 7:16. We're good. All right, so 7:16. Yeah, this thing, if I think it only keeps it on the day, or it actually can load as much as possible, but there's a lot of options flow that goes on. But I'm trying to take you back to the beginning of the market, because I will have another phone on this app, like when the market opens, because if the market opens and one of these things is on fire, like I can't remember what trade it was, but the market opened up and literally at like 8:30, this thing was rolling in for call orders. And then a lot of them like had fire and one of them was lit up. So this even rolls to the next day. So let me see here. 7-6. Okay, so yeah, the day starts and this thing starts ticking in, right? So you can see people were going after banks and also travel. This is Las Vegas. This is Moderna, I guess. Microsoft. Hold on one second. Let's stop this call. Okay, so yeah, this is live. So when these starts pouring in, it's totally live. So I use them, like I said, to find different trades, but I only use the ones that light up. Like, it's going to give you a lot of information here in this app, but you don't want to go after all of it. Just go after the ones that are highlighted and in your favor, and don't go running after something you don't trade and you're not familiar with. Use this as a tool to sort of enhance your decision. Because if you're trading something and you start to see that there's actually some unusual activity coming in that possibly could be in your favor, like if the ticker just keeps rolling in, then that could help you. But any questions on option flow? Any questions? I think that's all I'm gonna do on the mobile. So let me disconnect this really quick. Stop sharing. Okay, cool. Hold on one second. Hold on one second. Okay. All right, let me pull up my desktop now. Share screen. Okay, cool. Hold on, I'm texting somebody that's blowing my phone up, telling them I'm trying to do something. All right, delete. Okay. Okay, cool. So, all right, let's look at what happened on the market Friday. So right here is this thing that I always tell y'all to take a look at, net inflow. All right, net inflow is always something you want to keep a look at. Honestly, my long-term account started going down and I was just like, I'm gonna ride this out. Just because there's a lot of buying opportunities that may come for this, but based on Monday, if it keeps falling, then I'm not gonna go with it, right? So if you actually look at the NASDAQ and everything right now, all of these are really tipping out. And so the last week, what we were really experiencing is just this bounce back off of this resistance right here. So when you're looking at the market, like I said, you always want to gauge what's going on. And on, let's see what day, I guess that was Monday. It did the death cross over here on the daily. And then that just sent the market spiraling down. But the good thing is the stochastics is starting to reset on the momentum. So I'm hoping this super trend right here bounces back for us on Monday. Because I'm starting to notice that like either Mondays are really great and then the rest of the week is kind of fading. And then what I do is come in on Thursday nights, like I was telling you all, to like gauge how the put call ratio is looking so that we can find out opportunities that are over leveraged in puts, right? Let me check this chat, see what's going on. How does the dark pool work? Oh, okay. Yeah. So I went over the dark pool earlier. So essentially dark pool is, it's, I guess I got to pull it back up. Well, dark pool is just, they're orders that aren't placed on the market. So when you're looking at dark pool, just know that those orders are, we don't know if they're buy or sells. We just know that we know the value in which it was. We know how many shares were in the transaction, right? But when you look at a dark pool, like I said, you don't know whether it was a buy or a sell. So it could be like, hey, dark pool order just came in for, QQQ at, this high at 70,000 shares, right? And then you're like, oh, well, maybe that was selling, right? Because you're like, well, surely they weren't buying up here, right? So that's how you gauge dark pool prints. So if you're down here and then you see a dark pool print come in for 70,000, right? You might assume that maybe they're trying to support the market, right? Maybe they're expecting a retracement from this point. So I always, I don't look at dark pool anymore. I used to. I just think it's kind of misleading. It's just, I like it if it's in my favor, I guess, but I don't really keep up with it because it's not really telling me whether people are buying or selling, right? There's a whole order book on the side as well when you're trading stocks. How do I get this off my screen? Okay, so let's say you do QQQ. I don't think they have the order book. Well, yeah, you have the order book here. And so I know what orders are coming in right here from the tickers. So it's like, if I want the reality, it's right here. But if, like I said, if there's something coming in, there's a dark pool print going off at this high, then I'm probably going to assume that they're selling. Now, if it, like I said, if it retraces and then you start seeing dark pool prints off of some support levels, then you know that that may be support going on a continuation. So it's also, you just have to gauge whether or not it's going to be in your favor. But dark pool prints are good, but don't allow them to be misleading, because sometimes they may have you thinking that, oh, this could continue. What essentially is somebody did another 70,000 shares of selling, and then it just sends the market down. But just generally speaking, yeah, this death cross right here is not a good look, right? So Yeah, this is just, yeah, I won't be trading on Monday. Maybe some put action for the SPY. One thing I always do though, y'all, I'm gonna tell y'all this little secret. It just gives me money all the time because Apple's to a point where it's too high. Y'all, every morning I will come in and buy a put for like 15, like go heavy, and I'll give it a minute to like figure out, are you gonna go up or down real quick? Because like once it goes up, once it starts going up here and people are like, oh my God, it could go on, this is where I'm buying puts. And then I'll let it drop until I might trade this thing for like 5 or 10 minutes and then boom, that's done. Right. Because for the rest of the day, it could fall. But then, sometimes Apple might kick back up. I don't know. I don't trust it. But what I do know is that joker gonna fall about every morning at this price. Right. So you just have to catch the right time of that fall. But when it's at a position like this where people may continue to buy it, like I said, I give it a second. I let it do its little, go ahead and push yourself up, go ahead and get that high of that candle and then buy a put. And then I just ride that joker, even if it's back down to, realistic, that's money for me because I'm making money from here to there. And if I want to ride it out, like if you really feel like you bought enough time, ride it out. Because if I would have held my option on Friday, this would have just printed the entire day. But that's been like a go-to strategy for me. But you have to be careful with days that it is close to resistance or support, because once it breaks these levels, it just goes ahead and breaks over it. So if we know that 145 is where we have supported resistance, don't trade around that, right? But if you see that it gets below this 145 and then it actually closes under this 145, that's put action all day, right? And then when you ask yourself, where would it go? Probably back to 140 just to, settle this down. But if the whole market actually, reverses from these last 2 days that were just bad, then you could see us bouncing off of this support and going back up, right? But yeah, I don't want to trade it around this line because it could either break here or it could bounce back off of that, and that's a little too close for my comfort. But as long as we're up here, I know that you have to at least come down, from your dream. I mean, once you hit 150, I'm coming in immediately and I'm buying a 150 put. And I did that for the last 2 days. And that was really how I was able to recoup my losses from my long-term accounts, is just really just shorten what I knew that had to take a break, and right now the market is doing the exact same thing as Apple, right? So if you look at the SPY on the daily, and then you look at QQQ on the daily, and you look at the Apple. You notice that we're all hitting these same limits right here, right? And we're all doing the same thing, which is giving back some of that over the last 2 or 3 days, right? So right now we've all hit, I didn't put a line on this one in particular, but we can back out and look at it. Well, we haven't been up here before, but I know that it gets rejected right here, right? So when you look at where these wicks hit and then where these candles are stopping, we can see that around this 360, well, 362 technically, it's 360 down here, but this 362, 363 area is where it gets rejected on the QQQ, right? So like I said, anytime you're trading stocks that are in these larger indexes like the NASDAQ and the SPY, it's crucial for you to watch them, because if these reverse, right, it's only like literally setting up for this to do the same, right? Because everything in this sector is tech, then I can't expect for Apple to just keep taking off and leaving the rest of tech. So the key thing is like watching how these price, and you can also trade options on indexes, right? It's a lot more volatile, especially with the SPY, because they have 3 expirations a week. So Monday, Wednesday, and Friday, they have expirations. But you can come in and trade these as well. If you know the market is overextended and you want to buy and you want to leverage your portfolio, you can buy a put up here that's long term, or at least long enough to let it fall, because it's not like the market's going to collapse at this point. I think it's having a nice healthy retracement to continue on an uptrend, but you can't just break highs and not come back and retest them. Right. So that's essentially what's happening. We broke this high. We're coming back, retracing, and really just trying to find these levels of support and resistance on each stock. Like I said, we know that 150 is too high for Apple. So I'm down to buy a put there, if not just to trade it for a scalp, whether it's 5, 10 minutes, 15 minutes, whatever it is. Let me check this chat. Check out Delta. Yeah. Delta. So Delta is what we went over when we talk about options. I guess that was like week 3 or 4. If you are trading options, Delta is so crucial. And I don't even have it on my chart. But I don't look at Delta as much as I used to. I just trade what I know, and I don't really look at the Delta now, but the Delta is important for you to know because it is how much you stand to gain per point that the underlying asset moves. Okay. So let's say that Apple on Monday, let's say it decided to bounce off of 145 and shoot back up to 150, right? If you bought this 146 call option, then for every dollar that Apple moves towards 150 or just moves away from this, right? So if you bought it here at 146 and you bought this contract for $215, you stand to make $50 for every dollar that Apple moves. Now, every dollar that Apple moves away from you, right, you get deeper this way. All right, so your 146 becomes right here. Now that increases your delta. Okay, so that's how options make it like your growth just so exponential, because you're going to make $50, or this is 50 cents to your premium, but your premium is multiplied by 100. So your 214 will go to 264 if Apple moves up to 147, or $1 from this point, right? So if Apple goes to 147.39, you stand to make that $50. But it's going to continue to grow, though. It's not like exact math, because if Apple goes to 150, that $4 isn't going to be $200. Not just going to be $200. It's going to continue to increase, right? So for every dollar, once you're this far, you now get $67. Right. And so that's why it's more advantageous to trade stocks that move at larger increments. Right. So trading something like Apple might be advantageous at a time like this, but normally Apple only moves maybe $1 in a day. Apple does not normally do this. Okay. So Apple does have these little spurts where it'll do a little high run, and then it's going to give all of that back and then go sideways for like 2 months. Right. Let's check this chat. It's prime. Check out. Oh, Delta. Sorry, I meant the stock. Gotcha. Delta, the stock. So yeah, Delta. Let's check out Delta. I mean, because I've been talking about that the last couple of weeks in terms of just travel stocks in general. So right now we're past our long term, and even last week we were in the same position, right, where we were literally past this. So as the market as a whole in terms of travel, like I said, when you look at Jets ETF, you can see that we've got Southwest, United, Delta, American Airlines. This is also way beyond its long term. So right now you're looking at, all right, so it's past that level. So, wow. Worst case, we could go as far as this right here. Now, if it's ever past your dailies, try the weekly. All right, because then we're going to see, all right, well, what's going on? Well, the weekly is starting to turn back around, but it's also crossed those long terms as well and broke this super trend on the weekly. So what we really want to see is some type of retracement here and a pullback in this particular area, because at this point, like I said, it's given back so much on this, just the Jets ETF. There's also the travel. Let's see. And so this has got your booking and Expedia, different resorts as well. So your Las Vegas Sands, remember I was telling you at the market open, we were seeing those Carnival and Las Vegas Sands calls come in on the options flow. So essentially people are going to try to get a head start on this. I bought shares in different travel things just so I can keep an eye on it so that I know that, like, because I was profiting for like 2 days and then it just turned around. So right now I'm waiting on the time to buy options because I don't like to jump ahead of this, because when we break this isn't good, right? But I do know that I need to start being prepared for some type of return. But now that we've closed under this, we have to recoup and recover. And so that now that we know all of these are back to some lows, right? Like you said, this is prime. And with the drop that we had on Friday, it's even more prime because the entire travel ETF dropped almost 3%, right? So if there was some big drop we were looking for, it's there because it just broke this support, right? So this support in terms of the travel stock, if that's where it bounced off and that's where we came back to, we bounced off here, had a great day right here and gave that all up. And then on here, we just completely dropped below it. Well, now it reset all of this stuff. So you're oversold on RSI, your stochastic is literally as low as it can get. And your MACD is in a great position as well, because I don't like this, but I can definitely get with this. So when you say it's prime, definitely travel is like something I'm really keeping my eye on right now. And like I said, the way that you find these types of opportunities, when you go into the ETFs, look under analysis, top holdings, and then you can actually find out what stocks are in here. So if you know the travel is down, well, if I go look at Southwest, it's going to look the exact same. You know what I mean? So this is how we find these types of trades. So good call on that, Max, because yeah, we've had our eye on travel for quite some time, because look at this is like what Twitter was when I bought it. Twitter had fallen all the way down to 49 and I bought it, and now Twitter's back up at 60, right? And Twitter did the same thing. It's just you got to be patient, right? So Twitter dropped below its long average, and look, when you might come in and be like, all right, it's going to bounce back. Nah, it'll break it, right? Because now that you've here, well, we got to build up some, because you know the demand may not be here, right? Because I can tell from the volume, if there's so much volume selling to get us here, well, I need just as much volume to get us out of this hole, right? And so if that volume isn't coming in the next few days, like this was even lower, right? So yeah, it just completely dropped after that. And plus the indicators will tell you this kind of information. So we're here, it's not looking any healthier. It's still opening up. This isn't resetting. It's not pulling up. And then boom, you start to see it pulling up here. So, all right, cool. I feel more confident to enter after that. So just like these travel stocks, Twitter was in the same position. All right. So what we're looking at is that same exact opportunity, because Southwest is probably the exact same price, looking the same exact same, right? So Southwest right now is at $49. And I think at this point, I think I at least feel comfortable for some long-term type contracts. Because like I said, we have to be patient on this to turn around. And looking at this, it's still kind of jerking back and forth. Like you can see this green, then the red. And so, and then there was a huge sell-off on Friday, just on every avenue of everywhere. Everybody got hit. But the good thing is it reset our stochastic. Our RSI is still down here. MACD is pretty low, right? It's not at all-time lows because we're not in a pandemic, but it's pretty low, right? If there's any, I told y'all, if there's anywhere you want to be, it's down here. I feel more comfortable here because like long-term, I'm trying to get back up here, but I can't get with this. I can't buy here. I ain't buying here because there's room to fall. So you always want to look for the positions that are, at least, you know, in an opportunity to bring you back up. Let me see. So good look on the Delta, but you can look at travel stocks as a whole. So if you go back to Delta and you want to look at what ETFs Delta's in, and want to check out what else is available, it's in Jets, it's in Harvest, it's in the ETFs that I just showed you all, right? So you don't have to look any further than that. Maybe you could look at this Spdr Transportation ETF. Let's take a look at it. It's doing the same thing, right? And it's trying to approach its long-term, but it's past what it usually normally respects, right? So if it's been respecting this 50, it then came to the 100 and broke down from this. This might even be something that you should set an alert on, like, hey, if this passes this price below 80.10, travel is falling. Bye. Or you can't type too much in here, but make sure you're writing a note with your alert, okay? Because it's no good if it alerts me XTN is below 80. Like, I don't even know when and why I set that alert, right? But price below 80 on XTN, travel is falling. Okay, so this has hit a long term, and I'm going to open that up and be like, oh, dang. Okay, so this hit that long term. This is a travel ETF. So let me go look at what's going on with the rest of these travel ETFs. Right. So always use these ETFs as a way to sort of reverse search for opportunities and maximize the actual I guess, leverage that you have in your position and when to get into your particular industry or sector or whatever that ETF is following, whether it's airlines or travel as a whole or resorts or weed. You know, there's so many different ETFs. Like I said, I have a whole watch list, what I title indexes. So you can see weed got hit the biggest, right? So because these are from the change from low to high. So we got hit the hardest, right? So like I said, when we went to the courts or the drafting of the bill, it completely took the weed business with it, right? So weed is another sector right now that's getting hit hard. You know, you got stocks like Tilray that are usually trading at 20 something dollars are now like $13. So when you talk about how to keep up with the market and how to keep up with your watch list, it's best to watch them in bundles, okay? Because if you like trading weed stocks, okay, I need to keep up and see that they're down. And even in the aftermarket, you can see that this bounced back 5%, right? So energy is down right now, right? And what's in energy? Well, let's take a look, right? Top 10 holdings, gas, oil, basically. So you can probably assume that your Dow is down with this. So yeah, oh, here it is, Dow right here. The Dow is down with this joker. So that's why ETFs are so important, because you ain't got to do all the work. It's not like you got to be like, Exxon's down, I wonder if the rest of them are down. It's like, no, energy down, Dow is down. Airlines are down, the Dow is down, right? So yeah, make sure you all are tracking some of these ETFs and following them as you kind of trade within certain industries and sectors. So any questions? No questions. All right, that's pretty good. I mean, y'all can unmute too. I know some people may try to talk but don't realize they're muted. But I really just wanted to go over that the options flow. So kind of get the options flow app, check it out. It helps you kind of guide you through you know, what kind of flow is coming in, so you can gauge whether or not you need to be in that option or not. Or maybe there's even an option that, you know, you didn't know about, and then there's this hot alert that comes through and you're like, well, you know what, I've been waiting on that opportunity, let me give this a try. So if you're looking for larger returns, larger time frames, well, you can trade on larger time frames. Larger returns just means larger investment, right? Like bigger risk means bigger reward. So you really essentially would have to trade more money or put up more money to win more, right? Because, you know, 2020 was a year of like 1,000+ gains, right? but this year you may only get 100, maybe 300%, right? But those are going to come under those type of out of the money type contracts where you buy them for 10 cents or 17 cents, and then it shoots up to 30 or 40 cents, right? And then you get your 300 to 400% gain, but you have to buy so many of those, or it actually has to work in your favor, because those, since they're out of the money, if it doesn't work in your favor, it completely takes your whole premium. So I wouldn't focus on larger returns. I would just focus on safer returns, because to get safer returns, yes, play larger time frames and longer contract expirations, because they have less risk. The closer your expiration is, the more volatile the option premium is, right? Because you're now working against theta. So theta is working against you, but at the same time, if your option is actually going in the right direction, you're trying to make money, but that money can immediately be taken by theta because of the short time frame. So if you don't know how to trade options, you do not need to be trading weeklies. You need to be focusing on monthly type contracts that they don't have a W next to them, right? So let me show you this really quick. So let's take a look at Apple. Well, let's take Love, for example. Let's go to travel. Let's look at Delta. Let's take a look at Delta. So if you're going to come in and you're going to trade Delta, we don't know when this is going to turn around. So we definitely don't need to be playing weeklies. Okay. So you want to come in for this August 20th because it's a monthly. It doesn't have that W next to it. Now, all of these are going to be monthlies after that next monthly. All right. Because these weeklies only exist because they're newer. The week is here. I want to trade it. Right. So these weeklies only come within the month, because once that month starts, your option premium starts to lose money in the month that it expires. So once you find your monthly, it's mostly monthlies after that. All right. So you can, if you're long term, this is how you can trade options contracts. First, like, let's say you were confident about Delta, right? And you see that, all right, where stochastic is down, MACD is down. All right. So where are they buying options? Let's see. So in August, for the strike price in August, let's see, we got some people really leaning towards these calls. Let me make sure. Yeah, it looks like people are leaning towards calls. And how do I know that? I'm looking at volume. But open interest is really what matters too. Like, because that's how many people are on your team. And a lot of people got some open interest right here on this 45 call. And it's only $35, right? So man, we might be looking at something right here. But essentially what we're looking at, if you pay $35 for this contract, you only lose $35. But you also have until August 20th for this thing to just reach 45 bucks. Can it do it? Yeah, that's pretty possible, because really that $45 would be us trying to get back to the mean, right? We're just trying to hit this recent high that Super Trend is saying is potentially possible, which is why these people may be going for this strike price right here. But they've lost quite a bit of money. This probably used to be $90, then $60, then $50, and now these people are down to 35 cents because the thing just dropped off. So you can imagine that these people are still holding, though. They still in here because they see something. So this is what happens when you're losing, and you keep averaging down. All right. So these people are constantly averaging down in this position. Because there's not a lot of building up of open interest on the continuation of the fall here, right? People are starting to go ahead and take their money, because if people were betting against that, there would be a lot of open interest below the price, okay? But there's a lot of open interest above the price, which means that people are waiting on the travel industry to back. So with this drop on Friday, man, that actually makes this even more prime real estate for some long-term type plays, or short-term, depending on how you want to trade it, right? Because if you look at short-term, you can see it's sort of the same sentiment. But I would essentially use bar chart to go look at the put call ratio to break that down. I'll wait for a little dip, then grab it, but could bounce tomorrow since 40 is my psychological. That's good. Psychological, I have to go now, but thanks, right? Yeah. Cool. Nice. Cool. Well, if we got no more questions, that's it. I really just wanted to show y'all that options flow app so you could just have some more trades thrown at you, but guided through your own trades as well. So, if we don't have any more questions, I will see you all next week. Let me stop this recording.